Imagine starting a small project today that could literally turn into millions of dollars while you sleep. Most people think the stock market is this scary elite club where you need a math degree to survive. But the truth is much simpler. I'm going to show you exactly how I turned a few $100 a month into a $1,000 portfolio, even through some of the scariest economic crashes in history. If you stick around, you'll see that the biggest risk isn't the market going down, it's you waiting another day to start. In this video, I'm going to chat about how the market actually works over the long haul, setting up your investment account the right way, grabbing free money and tax perks, the music chart strategy for winning, how to automate your wealth, picking individual stocks without losing your shirt, the massive cost of waiting. How the market actually works over the long haul. Let's go back to 2005. I was 18 and just starting out. Since then, we've had the 2008 financial crisis and a global pandemic in 2020. Every single time, people screamed at me to sell. They said the world was ending. But I stayed in. Because I did, my money grew at an average of about 11% a year, from 2005. If you just put away $250 a month starting then, you'd be sitting on nearly $1.3 million today. That's the power of time and staying calm when everyone else is panicking. If you're still watching this video, this means you're interested in investment and making some extra money for your future life. I'll show you how to begin with simple words. Being in the stock market is not that hard and scary after this video. Now, hit that like button and subscribe to my channel to support me and my channel. Simple as that. Let's get started. Setting up your investment account the right way. First things first, you need a place to put your money. Don't let this part overwhelm you. Back in my day, I had to call a guy on a rotary phone just to buy a single stock. Now, you just use an app on your phone. I personally like eToro, but use whatever feels right for you. The trick is picking the right account type so you aren't giving away money you don't have to. It's much simpler than it looks once you actually open the app and see the layout. Grabbing free money and tax perks. The account you choose matters a lot. In the UK, look for a Stocks and Shares ISA. In the US, look for a Roth IRA. If you're not sure which account suits the best for you, ask ChatGPT or Gemini. These are basically tax buckets that let your money grow without the government taking a huge cut of your profits later. It's a total game changer for your long-term wealth. Also, before you buy anything, make sure you have some emergency cash tucked away in a normal bank account, enough to cover your bills for a few months. Once that's set, depositing money into your investment app is as easy as buying something on Amazon. You can even get a free stock just for joining some apps, which is literally free money to kickstart your journey. The music chart strategy for winning. Now, how do you actually pick what to buy? Most people think they need to find the next miracle stock. Honestly, that's hard work and risky. I prefer the music chart approach. Think about the top 40 hits. When a song is popular, it stays on the chart. When it flops, it gets kicked off and replaced by a new hit. An index fund, like the S&P 500, does the exact same thing with the 500 biggest companies in America. If one company fails, it gets swapped out. By buying one index fund, you own a tiny piece of everything. It's the safest way to grow because you aren't betting on just one horse. How to automate your wealth. The real secret to getting rich isn't being a genius, it's being consistent. My son is running a cool experiment where he invests just $5 a day, the price of a fancy coffee, into the S&P 500. He just set it to auto-invest and forgot about it. He's already seeing profits in just a few months. Most apps have a feature where you pick your funds, tell the app how much to invest every month, and it does the work for you. It even reinvests your dividends automatically. It's like a snowball that gets bigger and bigger every time it rolls down the hill. Picking individual stocks without losing your shirt. I know some of you really want to try picking individual stocks for those big wins. It's exciting, I get it. Just remember there are two ways to do it. Some people look at charts and patterns. That's technical analysis. I don't really do that. I look at the company itself. Is the brand famous? Is the leadership smart? Is the company actually making money? That's fundamental analysis. If you're going to buy a single stock, like Tesla or Google, plan to hold it for at least 5 years. Don't stress about the daily price jumps or the news headlines. Just keep it in your portfolio and be patient. Things will happen on time. The massive cost of waiting. A lot of people ask me if it's too risky to start now. Look, the biggest risk is waiting. If you start at 25, you have a massive head start because of compound interest. If you wait until 35, you have to invest way more money just to catch up to where you would have been. The market will go up and it will go down. That's normal. But history shows that if you stay diversified and keep your cool, you'll come out on top. You don't need to be rich to start, but you do need to start to be rich. Go grab that first investment and get things moving today. It is not that hard. If you're still confused, watch this video again, and go online and Google the words you are not familiar with. And last but not least, don't worry about all those graphs and numbers. Just trust on what I told you today.